This is Rod Kusin, Spooman for Risk on Tuesday, August 9th, 2011, all times on the chart, Central Standard. Looks like the market has responded quite nicely to the Fed's decision not to change rates. They've remained status quo, and so we've had a nice 70-point plus rally off of the bottom of the move after the announcement. Unbelievable. 70 S&P points. Amazing. But let's talk about how our strategy is doing. We've pretty well made all of the code adjustments that need to be made, and things are running smoothly. They ran smoothly today. We may make just a brief change in one of our settings, but the code, most importantly, is operating in a proper manner. So let's take a look at what happened today. Now I'm going to go ahead and take a minute, and maybe a lot of you won't be that interested in knowing what constitutes our strategy, but we won't black box it for you. We'll explain it to you. This chart, as you can see, has numerous indicators that are being plotted on it. These indicators are involved in various aspects of the rules pertaining to our strategies. So we have the premium set at 100 ticks or 7 minutes, the large contract at 1 tick or 3 ticks. We have a 3 and a 500 ES tick set up on our volume. We also have the 1000 down here. We're also tracking the Z-score on the VIX set to 1 tick and the Z-score on the 300, 500, 1000 tick bar. And then we've got one last little indicator that I started looking at and said, I'm not going to tell you what that is, but I like it. I like it a lot. So, to put it into the general context of things, our strategy combines all of the data that you see being plotted here and uses it according to a variety of different rules to generate a signal. And that's really all you have to know. The strategy also has some specific features in it that we do want to talk about, which pertain to our stops and our profit targets. Now, because the market has been moving so much over the past few days, we increased the profit target on the initial portion of our contracts to 12 ticks, so 3 points. Then we increased the profit target on the second portion of the contracts up to 28 ticks, or 7 points. We're trading 5 contracts, 60% of which are exited after the first profit target is reached. But then notice we are maintaining, I know some of you are saying you got to be kidding, but we are maintaining a 5-tick stop loss. We also have set up in this series of strategies a provision so that if we move 7 ticks to the good, but then the market retraces so as to try to take us out of that position, we'll move the protective stop at 5 ticks up to break even plus 1 tick. So if we've moved 7 ticks in our favor, we terminate the stop loss and move our protective stop, if you will, to one tick above our entry price. Now that's true in each of the three strategies that we have working on this chart. Now we have more than that on this workspace, but 3 out of the 6 turned off. All three strategies took a short trade at 841. Our first profit target was reached, as you see here. There we go. And then, true to the conditions that we've established, if the market moves against us after it's already moved 7 ticks, which obviously it had, because we took a profit at 12 ticks here, if it moves back, we get out of the trade at 1 tick from our entry price. So over here you can see, if we can line it up, the short took place at 11.23 and the break even at 11.2275, 1 tick from our entry. We had another we had a second long trade here. That is to say, our second trade was long, hit our profit target, another break even. Another long trade, hit both our first and second profit target, and as soon as that second profit target was hit, as soon as it was hit, the strategy went long again and hit the first and second profit target the second time. Then it broke even on the remaining portion of those contracts. We got another trade here that broke even, and by the way, when I say break even, generally speaking, I'm talking about with a 1 tick, profit target, because that's where the break even is set to. Now we could go through all of these trades with you, and there's really no point in it. So I'm just going to select a few specific trades that are a little bit different. And if you've been watching our videos over the last week or so, you'll notice that we've been talking a lot about our hold trade feature. This short trade here exited by way of a hold trade. And the hold trade basically means that we have market conditions on a 300 tick volume and a 300 tick z-score, where if that is an agreement before we get into a hold pattern, the trade will exit. So we took a little bit of a loss on that trade. Here the fill was at 37.50 and the hold trade exited at 40.25. So a little loss there. But then the long trade, which happened right after that, there's both a hold trade and a long trade on the next bar. That hold trade moved up to hit its first profit target, and then it exited on a second hold trade as the market began to move down. So we have a number of situations that are really quite like that, lots of trades, and that's what I don't really like. I want to reduce the number of trades. We've got way too many trades. Now, granted, I mean, the market is moving, and when it's moving as much as it does, being that we're set up to exit our trades, if we can get back in, well, we will. All right? And that just makes for another trade. Now, I don't want to increase my profit targets. I want to refine my entries. I want to improve my entries. So we've figured out a way to do that. so that will reduce the number of trades while hopefully increasing our accuracy. We did really quite well through the course of the days. You can just look at these trades. You know, first target set, second profit, target hit. Then on the long side, keeps on going up. We start shorting the market in at around 11. Kind of goes sideways. We finally pick up the bigger part of the move. Kind of goes sideways again. Then we pick up the bigger part of the move. Several break evens here. Then we move up. But then, and I'm, right at the time of the announcement, right over here, as the market shot up here and then started to come down, we didn't catch that drop. Now that was a big drop, but conditions just were not favorable to enter the trade based on our variety of conditions that we had set up. So we missed a good portion of that move, picked it up, hit our first profit targets, and then broke even, exited on a hold trade here, ran up nicely, then came back down. Then we started picking up the trades thereafter. And then finally we started going long again before 1 o'clock. And then finally long again. Exited on a hold trade and it continued to ride up. And we just kept on taking profits and getting out and taking profits and getting out. And there you have it. So, what does that look like all in all? Well, it looks like a very good day. That's kind of ridiculous. 170 trades, I mean, that's just, we don't need that. 5 contracts, and you can kind of see that's not a bad day. But then again, my goodness, the market moves 70 points. Come on. You can pick up some of that. Hey. All right. Tomorrow what we're going to do is we're going to make just a slight adjustment in how we're using the VIX. I won't tell you how, but we're going to use a slight adjustment on the use of the VIX. And I'm going to try to set this up so that we have a head-to-head comparison of the two in order to look at the differences between the two settings. I'm pretty confident we'll have a better arrangement with this slight adjustment that we're making. We're not changing the code any. We're just messing a little bit with the setting. So we'll be making that change. Also, let's sort of just back up here for a second. I wanted to talk about our one of the features of our strategy that's helping us to trade with the trend. How do we determine the trend? Well, we do it in a couple of different ways. Let me get back to the beginning. There we are. Okay. Now you see the premium here, the Z-score on the premium, and you see the Z-score on the large contract 3-tick. Okay, these two, here and here. These two indicators are used most often when we're trying to determine the trend. All right? Now the premium, leading indicator, and as you can see, the premium has remained short as the market began to move up. Yet we had long trades, and that's because some of our strategies are set up, pardon me, some of our strategies are set up to use the large contract 3-tick Z-score. Now we also used the 1000 tick down here. So even though the premium was short as the market rallied up here, and the premium, of course, as you know, is a leading indicator, it doesn't really go long until the very last portion of the move. And then it drops back down into a short posture. Right after 9 o'clock, the premium starts going short again. We normally interpret that as being something of a peak. The premium remains short, momentarily goes long, then comes back short. So there's a peak in here. So now the strategies wherein the premium is being observed, some of our strategies can now short the market. Other strategies, however, are still long. Now over here, right in there, that short trade is being governed by way of the S&P as well as the 300 tick down here. Pardon me, the 1000 tick down here. Now let me show you where we've got the premium. There's a premium trade right in here. Now let me back up, pardon me. These two long trades where we have the circle, those are premium trades, wherein the premium is long. Shortly thereafter, that magenta circle, that's a premium trade. Premium is short, as you can see, based on the Z-score. Then the premium is long over here. Another premium long trade. More here. Yet we have some short trades. Why? Because the large contract 3-tick temporarily went short. Now the premium is long, as you can see, and we're moving down. We capture some of the short trades and then go long as the premium over here remains long. We've kind of come through that dip and we're going long again. And at the top of that move, premium is short. We got a couple of trades that go long. Not much happens there. But the overall direction now is short. So that's why we have 3 different strategies. To pick up good conditions where the premium may not be in agreement, yet certain other indicators tell us that we ought to take a trade contrary to what the premium says. So that's why we have 3 different strategies there. Okay, so let's just sort of scan through that one more time. I can see a way that we can improve on those entries. Definitely see a way for us to improve on these entries. So I'll look forward to running a video tomorrow if we have time to Well, I'll get that video out one way or the other. It may be late, but we'll get it off. But we'll improve on the entries based on just a simple adjustment in the strategies. Now, one last thing, if you are saying, well, Rod, this is an awfully busy chart. It is. Yes, it's a busy chart. And if you don't want all of this, you don't need to have any of it. You can just have the signals if you want. These indicators are there just for visual reference. They are not involved in the strategy taking the trade. So these are just there for the purpose of plotting some of the data that is being used by the strategy, and it also helps us to sort of look for other opportunities where we may have elected to take a trade based on conditions that have not been incorporated into any particular strategy. That takes a bit more skill. So we invite you to come and take a demo with us. We continue to emphasize that if you do that, you will walk away having learned things that you will not learn anywhere else. We will give you information that you can learn at certain seminars, and it will cost you several $1,000s to learn it. We will give it to you free. Now, who makes a statement like that? And I guarantee that you will be a better trader as a result of taking our demos. Even if you decide not to do business with us, you'll be a better trader. So we look forward to even better results in the days to come. You know, obviously when the market is moving with these huge moves, I mean, you know, this is reminiscent of what was it, 2-3 years ago. You know, the market was moving, 20 points at a pop, and it was time to just eat up the market if you had a good strategy. We've seen these kinds of times. Our strategies do very well in markets that are moving slowly, moving very little, or moving a lot. We do well. So in any case, we'll leave that subject alone, and we know the market is going to probably sell off some more. I don't think this correction is over. The overnight market, for example, it plummeted. Let's just take a look at this. The overnight market dropped under 1100, went all the way down to 1077. I don't see that as being any kind of a support area, and it certainly is no place to be expecting support when it's taking place overnight. We've got to see that tested during the day. So we've got to address the needs of our clients now, so I'll leave you with that thought. Market's going to probably come back down, test out that 1077 level. But in any case, come and see us, ask for a demo. You'll be glad you did. This is Rod Kusin and Spooman for Risk.